Hello everyone, I hope you're all doing good. Before I start lecturing, I would like to make one announcement because I have received many messages from the students about the assessment one, when we're going to have it. The assessment one will be on after the study break. We're going to have it after the study break. So today we're going to finish the chapter one, the longest chapter, and you will do some activity, and then we will meet directly on the exam. The exam will be on the 26th of October. Like, it's right after the study break ends. You will just get into the exam. So, but questions types, it's most probably multiple choice, but I'm still thinking to add some open-end questions to make it mix up, so that it will get a good mixture, two different types of questions. And what will be included? It will be included chapter one, everything, whatever we started in here, starting from the NPV and ending up with today's topic. This is it. And I want to tell you something, guys. Last time I told you that I'm gonna do a project in this class. The project related that I will invite every 2 weeks a lecturer from the industry, more specifically from the investment banking. So every 2 weeks he's going to do presentation. But the first presentation was introduction about his company, about himself, and second presentation will be related directly to our subjects that we're studying in. More specifically, he will bring specific cases, and we will solve these cases all together. So he will explain how they're doing these cases and what they're doing and so on. And this case will be included in the exam, following exams like exam 2 and the assessment 3, the final exam. So at the end, you will have a really good experience from the industry, from the investment banking industry, more specifically from the Kazakhstan financial market. So it will give you a really good benefit. However, what I noticed, like from maybe 60 students in total, only 15 students attended. So all the classes that he's going to deliver will be considered as activity as well. So those who attend, they will get points for that. Those who doesn't attend, they will get nothing. They don't get any points and they don't get any knowledge, which will be a really bad disadvantage for those who are missing these classes. Really, I urge you, to attend this type of classes. This is in the benefit of yours. If you do not attend, it will be in the expense of yours, actually. So I really strongly recommend and advise, please do not miss any lectures related to practice side. So basically what we do here, we are combining the theory and the practice so that you can really get benefit fully from the course. So this is it that I wanted to make the announcement. And the second thing that I want to repeat, I'm taking the attendance. Like, I will not take now, I will wait a little bit more, but when the others join. So I will start the lecturing now. They're like a little bit left for the chapters to finish it. So we'll follow that information, what is left, we'll cover it, and I'll take the attendance and I'll let you to write the activity number 5, which you have to submit. For all activities that you submit, you will get the points. In total, it's 10 points. There will be no makeups for any activities, no makeup. So please make sure that you really submit it. Again, I'm repeating, the correctness of the activity is not graded. Please try yourself on your own self, try to do something and submit. Not just submitting the empty files like it was in the previous activities, not submitting the copy paste from your friends. Just do it on your own. Try it, because it's going to benefit you in the exam as well. Okay, do you have any other questions? Anything you want to ask before I move to the lecture? If you don't have any questions, please let me share the screen with you, and then we can start So accounting and economic income in the context of the capital budgeting. So accounting and economic income are the measures, are alternative to the basic discounting incremental cash flow approaches that have been used in a standard capital budgeting model. So project's economic income is equal to the after-tax cash flow plus change in the investment market value. Change in the investment market value, it is ending market value minus beginning market value. More specifically, the change in the investment market value is all about the economic depreciation, where the economic depreciation is showing the beginning of the market value of certain investment and the ending market value. So that will give you economic income. So the project accounting income is reported net income on a company's financial statement that results from an investment project. Accounting income will differ from economic income with two reasons. The first one, accounting depreciation is based on the original cost, not on the market value of the investment. This is the first difference. Financing cost, which is interest expense, example, are considered as a separate line item and subtracted out of earnings before tax to get net income. In the basic of capital budgeting model, the financing costs are reflected basically through the VACC, which means weighted average cost of capital. This is the subject I'm not going to cover in here, but I will cover mostly in the chapter 2, how we derive this weighted average cost of capital. There are different methods, there are different ways of getting it. So you will see, but in this chapter with a just introductory, it is measurement of the cost of capital. It's a discount rate that we use to estimate the NPV and net and profitability index. Economic profit is the measure of the profit in excess of the dollar cost of capital invested in a project, which is calculated as following. So economic profit is equal to net operating profit after tax, which is EBIT after the tax payment. EBIT refers to earnings before interest and tax, which is after the tax. And $sign WACC, dollar cost of capital, which means that weighted average cost of capital or cost of capital is multiplied by the total capital. And the total capital is the dollar amount of the investment. So book value of the long-term debt plus the book value of the equity. So this is the introduction of the formulation. Economic profit of residual income, claims, and the valuation model for capital budgeting. These are another criteria that have been used to estimate the capital budgeting. So once economic profit is determined, it is easily to apply to the valuation of the asset. So NPV based on economic profit is calculated through the market value added. And in the formula, as you can see, that is the summation of the economic profit divided by 1 plus weighted average cost of capital, or discount rate that we use it basically. The residual income method requires estimating the return on equity, estimating the equity charge, which is the product of the return on equity and the book value of the equity. So subtraction of the equity charge from the net income, it will give you the residual income. So where RI is residual income during certain period, and NI represents the net income, and RE times BT minus 1 is showing the equity charge for the period of T, and which is required rate of return on the equity, and times of the beginning period of the book value of the equity itself. So we'll have the example, don't worry, I'm just trying to introduce the formulation. Like other capital budgeting methods, discounting residual income at the required rate of return on equity will give the NPV of the investment. So residual income approach focuses on return to equity holders. Therefore, appropriate discount rate is required rate return on equity. So we're given the example in here. As you can see here, suppose the both company has the following statements in millions, okay? Net income, book value of the equity, and required rate of return on equity. So ROE, shortly speaking. You've been already introduced this ROE already in your principle of finance and financial management courses and so on. I don't have to explain how you derive this return on equity. It's just straightforward the formulation using the financial statement. So these are the number of the years from 1 to 4, like 46 million, 49 million, 56 million, 56 million, 78 million, 81 million, 84 million, and 85 million. And required rate of return on equity is showing the same percentages, okay? Gives you the same percentages. For all years, if you calculate the return on equity, they get this using the financial statement. And there are steps that you need to follow to calculate the residual income for each year in millions, okay? First of all, book value of the equity. The first step, you start with a book value of equity. Like you get this down, 78, 81, and so on. You multiply by required rate of return on equity, which was in the previous slide, as you remember. That will give you required earnings on equity. So let me just show it you again. Here. Required return on equity times book value of equity minus 1, okay? This is how it works. So you calculate the required earnings on equity, 12% of 78, 12% of 81, 12% of 84, 12% of 85. That will give you 9, 10, 10, 10, and so on. But it's rounded here, okay, guys? It's rounded here. They're just rounded here. But if you use the Excel file, you can see like 10.2, 10.1, and 10 point something, and so on. It's the numbers are rounded in here. That's why it seems like they're same. The same thing in here, required rate of return. When they calculate, they use the rounded numbers. But when you calculate the return on equity, it will be a bit different. This is the step 1. Okay. Let me make it like this so that we can see the formulation itself. Okay, that's great. Now, as we can see here, the formula is here that we're trying to use. So the first step, we calculate this part. Now we need to calculate the second part, like using this part, like net income minus the required earnings on equity. That will get us the residual income, okay? This is what we do. So first part is this. Second step is once we have calculated, then we move to directly here. And then from net income, which is given from the above table of parameters, subtracting the required earnings on equity, and that would give us the residual income, okay? And the present value of the residual income discounted using the 12% of required rate of return on equity, and that would give us 126.1 million. So if you take the discount value of these all variables, like 37 divided by 1.12, 39 divided by 1.12 to the power 2, 46 divided by 1.12 to the power 3, and so on. So this is how it works. We do this and we discount them and we get 126.1 as a sum of the present value of the future residual incomes with a discount rate, required rate of return on equity, 12%. So this is an estimate of how much value the project will add, or if it's negative, how much it will be, how much it will reduce the certain project. Okay, it shows the value of it. So the claim valuation method simply divides the claims of the suppliers of capital and the values of the equity distribution. So the claims of the creditors are the cash flow to debt holders that consist of interest and the principal payment and are discounted at the cost of debt. This is what you should keep in mind when you make the claims valuation method. So this is another methodology that we're going to use it. The claims of the owners are the cash flow to the equity holders that are dividends and the share repurchases are discounted at the cost of equity. So example of the claims valuation in here, cash flow before interest tax, interest expense, cash flow before the tax, taxes, and operating cash flow after the tax. So this is the income statement when you construct or when you do the cash flow projection. This is what basically you follow. Okay, what you do it actually. Then principal payments are here. 11, 12, and 13 and $14. The money that you have to pay in original amount to the debt holders. So what are the distribution to the owners if the dividends are 50% of the earnings after the principal payments? And what is the value of the distribution of the owners if required rate of return 12%, if for the tax cost of the debt is 8%? So distribution to the owners, interest expense, which is given here. We get this number put here. The principal payment, the original amount that we pay. So total payment to the bondholder is here, as you can see, $15 for all years. It's fixed. And operating cash flow, which is here, 46 after the tax, we have it. Then we put the principal payments. Cash flow after the principal payments is equal to, so we deduct the cash flow after the principal payments. Okay, we've received the operating cash flow like kind of net income. Just before the distribution, we need to pay the principals amount, so we reduce the principal amount as well. And 50% of this principal amount will give us equity distribution, like dividends and the share repurchases. So 50% of this, 35 times 0.5, 37 times 0.50, and so on. Half of 35, half of 37, half of the 43 and 42 respectively. You get 21, 21, 19, and 17. So this equity distribution, this is the total payment to bondholders. We continue. So the value claims, present value of the debt claims that $50. So we need to do just get the present value of the total payment to the bondholders, the summation of all, with a discount rate using the cost of debt, which is 8%, which is given in the question as well. And present value of all equity claims of all equity distribution with a discount factor, with a discount rate, we use required rate of return on equity, which is 12%. And therefore, the value of the firm is equal to $109 in total. So this is another way of calculation. Another way, it's alternative way to the investment criteria that have been used so far, like NPV, IRR, profitability index, and payback rule, and so on. So this is what we do it actually. So $109. So however, the best investment criteria still is considered to be as NPV. This is are giving you one of the popular investment criteria that are used in project estimation. Okay, we have some examples. We can solve it in slides and so on, but however, I want you to solve it on your own. And before the exam, I will have 1 more hour as a tutorial of the questions to solve it at the end of the chapter. I will solve it myself. The questions that are the last question that I didn't solve it, like this last subject, just before the exam. And most probably I'm gonna make it on Wednesday during the class hour so that we can make it all. Or I will write you in advance when we're gonna have it. It will be 1 hour. Anyone who is free can attend it. Anyone who is not free, you might not attend it. It will not be taking any attendance. However, it will be recorded. If you wish, you can join live class. If you wish, you can join already recorded class. So you can join already recorded class and just follow it. I will dedicate one time. I'll dedicate 1 hour during the study break. If you're free, you can join. If not, you're always welcome. You can go after the class, see the recorded video in the Moodle. However, it's better to join because if you have any questions, it will be great to just ask directly in the class. If not, you're always welcome to ask the questions during the study break through the email, through the WhatsApp to arrange the meeting. I will be very happy to help you. I'll be very happy to meet you. I'm in my office. If you want to meet personally, like face to face, you're always welcome as well. You can come to my office. If you are allowed to enter the school, I'll be pleased to meet you in my office as well. You're welcome to that, no problem. So just arrange the time, just write it before you want to meet. Like maybe 1 day prior to the meeting, you write me, get the convenient time to you and me, and we can get an appointment and solve your issue if you have any. Okay, this is all for this chapter. Finally, we finalize it. And if you have any questions, please feel free to ask. If you don't have any questions, I will take the attendance and I will let you to write the activity. The last activity from this chapter. Please feel free to ask questions. Okay, it seems there is no question. Since there are no questions, anyway, that's good. That means that you really follow me clearly. I'm really happy, but sometimes when students, they don't ask question, either they understood everything or nothing. But I'm for the part that you understood everything. Want to ask question?
Can I add a question?
Yeah, sure, please.
Our activity until the class? Like
our activity until the 3 o'clock.
Okay.
Our activities will be until the, so let me take the attendance, first of all. Then you can do the activity part. Okay, just a second. Sanjar? Sanjar here? Islam? He was here. Okay. Aiday?
Here.
Yasmin? She was here. Janaman geldi?
Here.
Okay, great. Niyaz?
I'm here.
Tamiris?
I'm here.
Okay, great. Yerzat?
Yerzat here.
Okay, I can see. Abdul Ghani?
I'm here, Professor.
Raushan?
I'm here.
Binura?
Here.
Aidana? Begzat? Here. Zirui?
Here.
Sultan? Sultan here. Okay. Daujan,
I'm here, Professor.
Eldar,
I'm here.
Aydos, Gani, Artur, Gaziz,
I'm here.
Baglan, Zarina.
I'm here.
Baglan, you're here. I see.
My connection is not.
I see. I realized that. Abdurrahim,
Here.
Rayhan,
Here.
Alibek,
Here.
Danyar,
Here.
Danyar here. Sanjana,
Here.
Dalir Khan,
Here.
Baglan, Kleshov,
Here.
Milana, she's here.
Here, yeah.
Arnur,
Here.
Ilya, Soy,
Here.
Daniel here. Umarov Vladislav,
I'm here.
Diana,
Here.
Clementi,
I'm here.
Janel, Camila, Adilhan.
I'm here, Professor.
Okay, that's great. Okay, the question is that at the end of the chapter, in the workbook, please solve the remaining questions and submit the file to the activity number 5, which is here. Activity number 5. Do it now. You can leave the conference. I'm stopping my conference now from here. If you have any